Hi, I'm Sonia Luna, CEO and founder of Aviva Spectrum. My guest today, which I'm super excited, is Brenda Morris. Welcome, Brenda.
Thank you, Sonia. It's a pleasure to be here.
Well, I mentioned how excited I was because it was one of our first interviews talking about financial transformation. And, because several years, both in my own experience and in discussions with CFOs, the concept, this thought of modern finance and transforming the accounting department seems like a daunting task, but not to mention trying to understand these little pesky workforce guys called millennials. They really want, what do they really want from a modern accounting department to keep them motivated and excited about their career, and quite frankly, the organization that they work for too. So I know today's listeners are going to walk away knowing, first off, very instrumental steps, because I know you've done this at least 3 times, towards continuous accounting and developing a modern finance department. So, Brenda, given your experience as a finance executive and advisor, can you share with our audience what was your first, inspiration towards actually trying to create your ideal modern finance department?
Sure, Sonia. So I think from my perspective, the inspiration has been there for a long, long time. I think I come from a place of always wanting to optimize business processes and look to ways that we can add value as finance and accounting teams versus just checking off the box and getting the day-to-day operations and bookkeeping done. It's really how can we be strategic partners inside of organizations and provide our peers, our business owners, our department owners inside the organizations really great, timely, accurate, value-adding information. And so that's always been kind of part of my DNA and what I've believed in. I think over the last 10 or 15 years, it's been a challenge for finance executives to figure out how to do that. I think there's a little bit of change is always scary. It's hard to change. It's, when you've been doing something the same way for a very long time and closing the books and using Excel to do budgets and using Excel to do financial statements and run your close process sort of ad hoc, formalizing it and looking at ways of optimizing it can be a little bit frightening for folks. I think that with the millennials that are coming into our environments, they want more energizing and learning roles and value-adding roles versus just sitting at a desk and, crunching out Excel spreadsheet after Excel spreadsheet. So my first exposure, probably about 7-8 years ago, to BlackLine was a little bit of a trigger for me in that I always knew that I had this slant of going into an organization and helping, run, business process reviews and evaluate tweaks that you could make. Well, why do we take that step? These 8 steps, could we do 2 and it would satisfy that and not have to do quite as much manual work? When I saw the BlackLine tool at a CFO conference, that was probably the biggest inspiration that I've had and the turning point, whereas even if I didn't use the BlackLine tool, just the thought of continuous accounting and not having everything grind to a screeching halt for the 2 or 3 weeks surrounding month-end close and actually being able to start looking at having those optimized functions and the ability to add higher value versus just being seen as kind of the guy in the green shade in the back room. That was really, for me, probably the big turning point and just starting to think about how I could integrate this into the organizations that I was a part of or could touch and make life better for them as well as all the constituents that were, getting the deliverables that the accounting team was sending out.
Mm-hmm. And I love the fact that you mentioned that grinding halt, right, those 2 to 3 weeks right before close. Right. And it used to be when I was back in the day at public accounting, they'd say, you can leave and go to one of your clients after you're done and doing in public accounting, and guess what? You have just these quarter-end spikes, and that's it. But given some of the new accounting rules and some of the massive transactions and what we're actually accounting for, that spike is actually continuous on a monthly, sometimes even weekly basis. So with the concept, right, the theory of continuous accounting, it's smoothing out the workload. And I think if millennials were to actually take a graphical, just take a look at what your tasks are, okay, and if you used a software product that could automate some of that, and therefore your spikes are not only not as high, but more importantly, you're smoothing out some of those activities that really don't need to be done at that screeching halt towards that end of that month or that quarter. Now, most professionals, believe they have good systems in place, like, oh, I got Oracle, I got this great ERP package, and I'm doing just fine. Or they close their books on time, and they just have enough transparency to get by. But what are some of the warning signs, that finance executives should be aware of that they are behind the curve and they need to really start planning for their modern finance journey, Brenda?
That's a great question, Sonia. So I think that a couple of the key warning signs are probably the fact or the observation that you're always looking backwards, right? And sometimes you're not looking backwards days, you're looking back weeks and months, depending on the efficiency of your systems. And you're always in catch-up mode versus looking at real-time information and using, what's happening today and what's going to happen tomorrow as a way to develop a higher value-adding team. I think that the big lessons around the fact that you're not able to be proactive and you're being reactive in whether it's general ledger reconciliations or cash accounts or just the close process, or again, the fact that you really do come to some grinding halt for a week or two, and then everything day-to-day falls behind, and then you're catching up, and then it's time to do another close or another review. To your point, you are always chasing your tail versus being this proactive business partner who can literally day-to-day say to whomever it is that they work closest with on the teams, hey, have you looked at the numbers the last couple of days? There's something happening here. I think we need to make an adjustment. Versus 2 months from now, you look back and you're like, oh, something happened on October 10th or whatever the date happens to be, and we need to figure it out, but you're already 2 months in arrears on that, and then the problem has continued to expand and get worse or whatever the case might be. So I think those are a couple things. You hit the nail on the head a little bit on the millennials as well and just having a smoother workflow. I think another warning sign is just morale issues. I think that our workforce today, they don't want to have these huge spikes where they're working, 80 hours a week for 2 weeks in a row, and then they're normalized at a 50-ish hour a week for a week or two, and then spike back up because it's month-end close or it's quarter end or it's review time. And so I think when you start to see people on your team, their performance and morale degrade, that's a sign as well that things aren't going like they're supposed to, and that you have an opportunity to look at how do you move to a continuous accounting and a more smooth and real-time process.
Well, Brenda, we are wrapping up this interview, and I'm confident our listeners gained significant insight on what to consider and measure when they do start their own modern finance journey. Thank you, Brenda, for coming on our radio show.
Thank you, Sonia. It was a pleasure to be here. I really appreciate it.
You're welcome. This is Sonia Luna, CEO and founder of Aviva Spectrum, signing off.